What we're looking at here is a cash flow statement. Now you can hear that I'm out of class at the moment. A couple of camera problems that we're hoping to rectify. Now what we're trying to do is we're trying to create a cash flow statement by rebuilding accounts. So we've got my accounts over here and we're going to rebuild our accounts. I'm just going to, that's a bit better. I'm going to rebuild my accounts. But I've got this information over here and I've got what's an income statement, and I've got a balance sheet or a statement of financial position, as they sometimes call them, and I've got this additional information down the side here. Now my additional information is all really good, and it helps me in a lot of ways to identify a few things. Now, my cash flow statement's got to consist of a few things. Now, the activities that are in my cash flow statement are operating, financing, and investing. Now what goes through my operating is normally my current assets, current liabilities, income and expenses. My financing activities are non-current liabilities and equity, and my investing activities are non-current assets. So purchases or sales of non-current assets. So what we have to do is, from the information that we're given here, we have to construct our operating activities. So what I need to do first is calculate my operating activities. But we've got this additional information down here. Now if I look through this additional information, it's going to give me some good clues, especially in an exam situation, of how to not have to go through this process for a few items. Now I've got a cash dividend there. My cash dividend is a financing activity. I've also got notes were issued at face value for $90,000 in cash. These are a long-term source of borrowing. So that means I've got some financing activities here as well. So I've got two financing activities. This being a cash inflow, this being a cash outflow. And I've got some equipment costing $180,000 was purchased for cash. So that's my investing activities. So that's a cash investing activity, but it's an outflow. Pardon me. I've also got some equipment costing $20,000 was sold for $17,000. Now I'll go through the process of rebuilding it in the accounts, but usually in that additional information it's given me some answers. Alright, I'm just going to put another investing there for D. And my last piece of information is ordinary shares of 100,000 were issued to acquire land. The vendor or the seller of the land received the shares as payment for the land. Now this is a non-cash item. No cash changed hands. Shares were issued and land was acquired. Now what we want to do is we want to prepare a statement, a cash flow statement using the direct method. So let's get started on the direct method. Now it's a matter of rebuilding our accounts. This is the aim. I want to rebuild my accounts, but what I want to try and identify in these accounts is the cash flow. So what we're looking for is cash flow. Okay, now I've got my accounts receivable. I'm going to refer to it to rebuild what my accounts are. Pardon me, I'm just going to take a sip. That's better. Been a long day. I've got my accounts receivable here. My opening balance was $15,000. My closing balance was $12,000. And my opening balance is $15,000. So it's a debit balance. So my normal balance of assets, of my assets is debits. Normal balance for my liabilities and equity are credits. So my opening balances will be credits for these accounts. My opening balances will be debits for these accounts. Okay, so what I started with? I ticked off. I got 15,000 as my opening balance. I'm just going to put a little opening there. My closing balance was 12,000. Now what normally goes through my accounts receivable is sales or credit sales, and I've got my sales amount up here, 975,000. Now that's going to increase my opening, so 975, and what will decrease it is my collections, obviously. So I'll have cash collections. Now if I close off my accounts or balance my accounts out, that's 990. And if this side makes 990, what's my difference? Well, my difference is obviously what I collected in cash, which makes 978. And that is what I want to put into my cash flow statement underneath my cash from receipts from customers. So you'll have to learn your categories, and you should have learned that in accounting for organisations. Now my next step is I want to work out what my cash payments to my suppliers are. Now it's a two-step process. We've got to calculate purchases, but first we need to reconstruct the inventory account, which will give us some information which I'll put into my accounts payable so we can find out the cash. So let's have a look at my inventory account. I had an opening balance of 160 and a closing balance of 130. So I'll put those in. 160 is my opening, and my closing is 130. Now what goes through my inventory account is purchases, but also cost of sales. So my cost of sales is what I'm looking to do now. My cost of sales will reduce inventory because it will be moved out of inventory into cost of sales. So that becomes a credit. And I'll just put in a lot of cost of sales. So that leaves me with purchases. How much did I purchase during the year? So what's that make? 790. And so that'll be 790 here. So my purchases would then come out at 630. Now my purchases balance comes down into my accounts payable. And I'll show you where that comes in a moment. So let's rebuild my accounts payable. So my accounts payable is, my opening balance is 60 and it's a credit balance. So it's 60,000. And this is where my purchases now come in handy. So my purchases, I'll put it in as inventory, or purchases, is 630. Then my closing balance for accounts payable is 52,000. So I know what my closing balance is. If that makes that 690, it makes this one 690. So therefore this is closing. So my movement through my account must be my payments. And my payments would then come in at, what is it, 638. And I'll put that in as a cash payment. So it's gone through my bank account. So once again, that's an item that I want to include into my cash flow statement. Now I've got some further items that I need to look at. And as I adjust my screen, there we go. So what I'm looking now is my cash payments for operating expenses. Now there's a couple of steps in this process. Obviously I've got prepaid expenses, I've got accrued expenses, and I've got operating expenses here. So my prepaid, my accrued, and my operating go into making up these. So we'll have to work out what was prepaid in the previous year that we'll have to take out of this figure. We'll have to work out what's accrued that's in this figure that was So what we paid this year that's not in this figure is these accrued expenses. Okay, so let's have a look. We'll rebuild our prepaid expenses. My opening balance was 8,000, my closing balance was 6. So it's opening balance because it's a debit balance, opening, closing was 6,000. Now it didn't tell me anything else in my additional information, so I've got to assume that no other expenses were prepaid. So I've got 8,000. My closing would be 8,000. So what happens is I've moved from prepaid expenses into my operating expense, $2,000. Now that becomes important on my next page here, where I'm rebuilding my operating expenses. I'll just leave it up the top there for the moment. Next I want to look at my accrued expenses. Now my accrued expenses have a balance down here of 20,000, so we started, and it's a credit balance, remember, so it's 20,000. So opening, and I've got a closing of 15,000. Now once again, there was no further information in I'll slide that up, additional information. So I can assume that what's happened is 5,000 of my accrued expenses has gone into operating. 5,000. That's a bit better. My camera was a little bit off. Alright, so now I want to rebuild my operating expenses. So my operating expenses has a zero balance. It starts always expenses count start with a zero balance. What I'm going to do is I've got my operating expenses for my prepaid is 2,000. So prepaid. And I've also got my operating expenses from accrued. So my journal entries here, accrued. Now this means it would have been paid the year before. This would have meant it was paid from the years before in the current year. And what else do I need? I need to put into my account my accrued expenses up here, or operating expenses up here. So this really goes against my profit and loss summary. So it's really a so I'll just call it P&L summary, because when we close our accounts, what we're aiming to do is close that off. So really what I'm doing is I'm crediting my operating expenses, and the opposite entry goes to my P&L, being retained earnings. So that makes 181. So that means I've got 181 here. So how much cash did I pay? Cash payment of 179,000. So once again, that's a cash payment. That I want to be putting into my cash flow statement as well. Alright, now I need to calculate, I'll get rid of my top one. I need to calculate one of my next items, which is my tax payable. So there's a tax payable there as well. So let's go. So prepaid expenses ticked off, accrued expenses ticked off. My land, that increase in land was this $100,000 payment down there. I've got equipment 160 accumulated. That'll come. We'll get to that. All right. So my income tax payable has a zero opening balance and a $12,000 closing balance. So it's a credit balance, zero opening, $12,000 closing. And what did we do? We had an income tax expense of $36,000. So that's going to increase my amount of payable. That makes this 36. Then what have we got? Cash payment. Of 24,000. So So my 24,000 obviously is a amount that I want to be able to put into my cash flow statement, so there it is. Now we're going to show you how to rebuild the accounts for investing activities and my financing activities, but we've already worked it out that my financing activities are 32,000 and 90,000, and my investing activities are 180,000 and 17,000. But now we'll prove that. So what we're aiming to do now is we're aiming to look at our equipment. So to work out how much was purchased, how much was sold. Now, I had an opening balance of 0 and a closing balance of 160. So my opening balance was 0, my closing balance was 160. Now, it's telling me that my cash purchases, or my purchases of equipment, was 180,000. So that means that I've got 180 here and 180 here. So that was closing, wasn't it? So sold, equipment sold, is 20,000. So that's the first part of what I'm aiming to do. The next bit is to look at my accumulated depreciation. Now I started the year with nothing, and I finished with 16,000. Now accumulated depreciation is a credit balance, so I had an opening of 0 and a closing of 16. Now my depreciation expense through the year is 18,000. So I know that my accumulated depreciation, so there's 18,000 here. No, this will be depreciation expense. So that leaves me with 18,000 and 18,000. This is closing. So that means I've got equipment sold, or depreciation on equipment sold, of 2,000. Now I needed to do all those calculations in order to build this little schedule, to be working out the carrying amount of equipment sold and the cash proceeds right down the bottom here. So let's go. So the cost of my equipment sold, we knew that because it was 20,000. My accumulated depreciation on my equipment sold was 2,000. So the carrying amount was 18,000. Now if I take that carrying amount and I put it down into my next table, I'm now looking for the loss on the sale of equipment. Now we've got my depreciation, we've ticked off that, we've got this loss on the sale of equipment here in my income statement. So that means if that makes a loss, that means that this is 17,000, which is an amount that I want to be able to put into my cash flow statement. But it's already over here. So we've already got this piece of information over here. So we didn't need to really go through this. So if you want to save yourself a bit of time in the exam, read this additional information, work out where this stuff needs to go. Now up here is my purchases, which is obviously cash flow as well. So that would go into my cash flow statement. Now let's continue to rebuild. And we'll get into financing activities. So I need to reconstruct my notes payable. Now my notes payable, we've got them over here. Started with 0, ended with 90,000. So it's a credit balance, ended with 90,000. $90,000, so that must mean cash received is 90,000. So that becomes an amount I'm interested in putting in my cash flow statement. And there it is there. It's there in my additional information, 90,000. Could have gone straight to my cash flow statement. And the last thing we need to do is need to reconstruct my retained earnings, because there's more cash that will go through retained earnings. So what we're aiming to do here is my opening balance in retained earnings was 42,000 and my closing balance was 94,000. Now the things that go, I'll put in opening, close. Now the things that go through my retained earnings accounts are profits. And we've got our profit up here, 84,000. I can tick off every item now. 84,000. So that's going to increase my retained earnings, so I'm going to put 84,000 there. Profit. And that makes 126. So if this is 126, we then have a payment or dividend. That'll be a cash dividend, the difference being 32,000. Now once again, that's a piece of information there, because dividends are paid, or it'll be a cash dividend. Cash dividend. Now that 32,000 we already knew because it told us in my additional information that was 32,000 there. So there's a couple of exam techniques that you need to have a look at. Read this additional information. If you know what the financing activities are and the investing activities, you don't need to go through the process of rebuilding these accounts the way we've just done then. Right, which brings me to my cash flow statement. So my cash flow statement, I'll just organise my sheets a little bit better. So my cash flow statement's now to be constructed. Now, I'll put in the information that I can readily see. I can say my declared and paid a dividend of 32,000, so I'll go to my financing activities, payment of a cash dividend, 32,000. And because it's an outflow, I'm going to bracket it. So I'm going to tick that off as entered. I've got notes with a face value of 90,000 in cash. These are a long-term source of finance. Issue of notes, 90,000. Difference being 58,000. Whoops, I'll put it on the right line. And that's a cash inflow. Now my next item is equipment costing 180,000 was purchased. That's an investing activity. So purchase of equipment, 180,000. That's a cash outflow, so I'm going to bracket it again. I'm going to tick it off. And equipment costing 20 was sold for 17, so that's my cash flow is there. So I've got 17,000 cash inflow, which means that I've got 163,000 cash outflow here. And now what I'm looking to do is to get my other items that we've already gone through and worked out. So where are we? So let's have a look. We've got cash collected from customers, $978,000. So I'm going to tick that one off. I've got cash payments to my suppliers here, so accounts payables to suppliers, 638,000. And that's a cash outflow, so once again it's bracketed. Prepaid expenses I'm not worried about. My operating expenses, so I've got operating expenses here of 179,000. I'm going to tick that off as well. I've got cash paid for my, which is that as well. Now that's all down to, so that's all my operating activities. And if I quickly add that up, 137,000 being a cash inflow. So my 978 less all my items give me 137,000. Now what I need to do is I need to get what's called a net cash, so net cash flow. We know it's an increase here because it's what it's telling me. You'll have to work that out for yourself in the exam. 137 plus or minus 163 plus 58 gives me 32,000. Now my cash at my beginning, cash at the beginning, we go back to our balance sheet. Now my cash at the beginning is 159,000. So if I plug in 159,000, I can tick that off. Because that's a cash inflow, it's going to increase this. That makes it a 181. And I can say that that now reconciles because, oh, hang on, 191. 32 plus 160 is 191. And I got a bit panicky because I was going to say that this figure here has to reconcile back to my cash figure here. And if it does, I've got my cash flow correct. If it doesn't, make sure you've just got your items around the right way. Cash inflows, cash inflow, cash outflow, inflow, outflow, outflows, inflow. And make sure it is. Now there's this further note down the bottom here. This is to explain the movement in this account here. So non-cash investing and financing activities, issuers of ordinary shares to pay for cash. Well, that means that we're going to have a movement there of 100,000 and a movement there of 100,000. So there's no cash involved. We tick off our retained earnings has been done as well. Now, indirect method. That's all I'm going to say. It's not on the exam. Okay, so that's how to prepare a cash flow statement. Good luck.